Hello and welcome to Views from the Market, Midmarket Private Equity and M&A in Canada. My name is Mario Nigro and I'm a partner in the Private Equity and M&A group at Stikeman, Elliott. For today's podcast, I'd like to welcome our special guests, Adrian Bartha and Quinten Griffiths. Adrian and Quinten are the founders and managing partners of GoodCapital. Adrian, Quinten, thank you for joining us and welcome.
Thank you, Mario.
Yeah, thanks, Mario. Happy to be here.
Adrian, Quinten, we always start the podcast by asking our guests to tell us a little bit about themselves, and in your case, GoodCapital. So why don't we start there? Maybe I'll start with Adrian. If you could tell us a little bit about yourself.
Well, accidental entrepreneur, started my career in private equity and made my way into entrepreneurship after acquiring a small business in Calgary back in 2012. That business completely changed and I became a software entrepreneur kind of accidentally in building a business that helped protect people who work in dangerous industries. And so I got interested in software and tech kind of that way. And then ultimately partnered with Quinten here around 2020 when exiting my first business and started thinking about my next steps. And then Quinten and I met each other back in, I think, 2015. So going back 10 years now. Quinten?
Yeah, crazy to think about. It's been 10 years. Thanks, Adrian. So a little bit about myself. I'm a chemical engineer by trade. Spent 5 years, hard hat, coveralls, working in refineries in Northern Canada. Always wanted to be an entrepreneur, never had an idea. Went to business school thinking that would help me get an idea. Still didn't have an idea after completing business school. So instead of starting something, decided to go and buy something and raised a traditional search. I was unsuccessful in that traditional search. Ended up acquiring a turnaround business, taking a flyer on a turnaround, a municipal software business. Made a lot of mistakes. Really lucky, grew that business and exited it 2020 when I decided to formally partner with Adrian. And I guess the first time that Adrian met was at a Jamaican patty restaurant. I think it probably was like King and Dufferin in Toronto. It's probably a condo by now. It's probably been torn down and turned into a condo. But I originally met Adrian because I reached out to him. I think he was probably like the second or third or fourth search fund in Canada, like really, really early days. And I said, hey, like, how does this all work? And he actually answered my email. So, and we kept in touch and then we just saw eye to eye on a lot of things in terms of growing businesses and decided to partner together in 2020. And we've acquired 4 companies since then: Discovery Solutions based in Calgary, Sportball based in Toronto, Raisin based in Toronto, and Free Balance based in Ottawa.
Quinten, Adrian, you've had great success individually, but then obviously with GoodCapital, you're doing some, very unique things for our marketplace. You've done multiple deals, as you mentioned, Quinten, and I think GoodCapital is a great example of the kind of skill sets that you bring and the value that you add to these companies. And maybe I can ask you a bit about the thesis of GoodCapital and how it works, how you kind of came to find these deals. What are you looking for in deals? Maybe you can give us a little bit of the GoodCapital secret sauce.
Sure. There's 2 things where ostensibly we're different, and different doesn't always mean good, but in our case, it works for us. One is that we tend to roll up our sleeves. We're investors, but we're also operators and entrepreneurs at heart, right? So that allows us the flexibility to get more involved with our companies than maybe some would. But further to that, our choice of companies, we're selective, like all investors are selective, but one of the ways we're selective is we're only looking at companies that solve real world problems or that align with our values and our interests, right? And that allows us to galvanize and to attract great leadership teams. When the company solves a problem that's really interesting and that attracts the minds and hearts of other great leaders that ultimately grow great companies and enterprise value. So that is also something that is distinctive for us.
Yeah, nothing really to add to that. I would say maybe that's something that's a little distinctive of us. Is like all of our deals have been in Canada and all of our deals have been proprietary deals. We've never done a marketed deal. We would love to do a marketed deal. We would love to close a marketed deal. We've just never been able to settle on the bid ask before. And we've found a lot of success in just using our entrepreneurial networks to meet business owners and work with them on what their vision is and how we can continue to deliver their legacy and continue to put the business on a path that maybe they weren't able to do, right? So we really cherish the relationships that we've had with our vendors and still have very close relationships where they're guests at our weddings and all those other lovely things, and that's maybe something about us that's also very different. And in all those proprietary deals, Adrian, like I got to look back and I think every single situation is at least a relationship of 1 year, maybe even maximum like 7 years, I want to say. So we've had long relationships with these business owners before making the acquisition. And that gives us a lot of conviction into not only the company, but also the individual, because with these types of businesses, the business becomes a reflection of who the individual is, right? So if they have high integrity, they're high integrity people, the business will be a high integrity business. And the only way that you can figure that is to track it over a longer period of time, right? So that's important to what we do as well.
I'm going to come back to the proprietary sauce that you have, because I agree. I think you are unique in the marketplace in that you've really built up a strong kind of proprietary sourcing at GoodCapital that's been that way since the beginning. But I want to talk a bit about the hands-on, because sometimes when people hear the words hands-on could be a jingle that people hear. But in your case, I mean, it really is like there's hands-on and then there's hands-on. And in your case, I think it really is hands-on. And maybe Quinten, give us a little bit more flavor, because when we talk about hands-on, people think it's just kind of getting involved with the business, but you're way more involved than a lot. You really are invested personally in these businesses in a way that when people talk about hands-on, your hands-on is a lot more intense, a lot more everyday-ish, if that's the right word. You really are a part of these businesses and driving growth and driving value.
You know, for us, what's most important is the business accomplishing the mission it sets out to achieve. And if we can play a role in that, if we are the right skill set to help with that business, like for example, Raisin, Adrian was clearly had the right skill set to help that business this next stage of growth. And with Sportball, I clearly had the right skill set with that business. With Discovery, the first business that we acquired, we hired a CEO because Adrian and I looked at ourselves and said, we're not the right people for this. But in the case of Sportball, in the case of Raisin, both Adrian and I have the title right now of CEO. And we've made another acquisition since taking the CEO reins, Free Balance, where we're not going to be the CEO. We have a very competent and exceptional leadership team in that business that's going to continue to grow the business. But I guess, yeah, I mean, day to day, I'm probably at one point when we acquired Sportball, 5 days a week in Sportball, right? And then 2 days a week on the board of these other businesses, you know, I like to say. And now I'm probably a couple of days a week on Sportball while I'm mentoring the leadership team at Sportball to continue to grow and continue to let them show off their skill set. And Adrian's the same situation in Raisin, where he is probably a couple of days a week and letting the leadership team show their skill set. But yeah, we're doing everything from like interviews to performance reviews to speaking with prospective clients to conflict resolution to setting strategy to the financial model to everything. And that's what we like to do. I mean, it's what the business needs, but it's also just frankly how we like to spend our time.
Well, and I think that's part of that secret sauce of GoodCapital, because I think a lot of people in this space who are doing what you're doing don't spend that much, what I would call hands in the weeds, the way you two are. And I know that you've done 4 deals. Each one has its unique investor base. Each one, as you point out, you've kind of highlighted what you bring to each deal. How do you evaluate these deals? I mean, what's interesting about your portfolio is they are very different. When I look at your portfolio, it is, as opposed to being some funds will say they're very industry specific. In your case, they're very fact specific. It looks like very, and I think this goes back to the proprietary nature of what you do and the opportunities you see because of the hard work you put in on proprietary. Can you tell us how you got to these businesses, which are different from each other in a lot of ways, and frankly have attracted, like I'm wrong, but each has its own unique set of investors too, right?
Yeah. Adrian, do you mind if I take this one to start? Yeah. Okay. I think on the outside looking in, they might seem different, but I do think that there is like a commonality between them. So there's 3 companies that are software companies, and then there's Sportball. So let's talk about the 3 software companies. All these 3 software companies are solving mission critical, purpose-driven problems that really align well with not only Adrian's skill set and my skill set as previously having run and grown and exited software companies, but also just really drive on a purpose that we really personally believe in. And Sportball, honestly, was just a case of falling in love. To tell you the truth, like Adrian and I met that business, and I think I fell harder for it than Adrian did. If you don't know Sportball, we teach kids how to play sports, ages 1 through 5. About 70,000 kids go through our program every single year across Canada, US, India, and Singapore. We're a franchise business, which is also really, really cool. My wife is a pediatric physiotherapist, so she's all about physical literacy and taught me about this concept. I'm a super physically active person. I've got 2 kids. Adrian's got 2 kids. And we just fell in love and we looked at this business and we're like, man, this is just really, really cool. We want to be a part of it. And not only that, but it's a franchise business, which is also very, very cool. And we've had a lot of success with it and a lot of fun. So Adrian, I don't know if you have anything to add to that, but that's kind of some of the commonalities that I look at in terms of some of the themes that are common across our businesses.
Yeah, it's right on. I think like we're objective in the sense that we do have a criteria of 7 or 8 things that we look at and we score any opportunity on. And we debate that as a team with our associates as well. But we also accept the fact that life is short. We all have our strengths and weaknesses, and it's okay for us to love a business that we meet. And that can be parlayed into a strength for really growing the business for the next generation. And we embrace that. And that's fun. But we keep ourselves honest. We do look at healthy businesses. They generally have predictable revenue, good unit economics, markets that are attractive, upside potential, purpose potential, talent bench strength that we could build. I'm just listing some of them. And that's the same whether some of our deals were, well, I guess the smallest was like 5 million or 6 million enterprise value,
5
the
million,
largest is 70. And that might look different from an investment product point of view. Like if you're one of our LPs, you might say, well, $5 million deal is different than a $70 million deal. But in our case, when we're looking in the long run over like a 10-year time horizon, these are all attractive markets. And a 5 million enterprise value company with the right growth can be a $100 million enterprise value company. A $70 million enterprise value company today in 10 years can be a $1 billion company in 10 years. So that's the view that we take.
Adrian, Quinten, I have to ask, because if I don't, people are going to say, why didn't you ask them what the secret is to their proprietary sourcing? Because you've obviously had great success. You don't have to disclose too much. I don't want you to give away the secrets, but what would you say has been key to make your proprietary sourcing success?
I'd say 2 things: patience and Adrian. Adrian's a very
You buy Adrian?
likable.
Is that something you sell in a store? Can we?
Yeah, Adrian's a very likable, kind-hearted, thoughtful. I think we try to just be our authentic selves, and we try to just be patient, and we try to understand that timing is honestly the largest variable when it comes down to when a business transacts. And that's it.
You both have been doing deals for a long time now. I mean, I hate to tell you, you're getting old too. Don't do the rest of us here. But you've seen so much. And even, I mean, obviously you started GoodCapital 2020. What a time to start with all that was going on in the world. What would you say you've seen from a market perspective in the evolution of the market in the last few years? And frankly, where do you see the market going? You two have had great success. I think at this point, you're an independent sponsor, maybe becoming more like a private equity fund the way you're going. Where do you see, from a Canadian perspective, given where you've come from and where you're going, trends you've seen and trends you think we're going to see more of?
It's a good question. And to be honest, we probably don't reflect on the macro as much as we probably should. I think one of the things that has changed, like when I at least first set out and looked at businesses, there wasn't a lot of innovative financing options for a company at any stage of growth. Everything was pretty formalized or regimented. Now there's a lot more concentric circles and hybrid approaches to how a business gets funded or continues to grow. And some entrepreneurs, it's almost bifurcated. Like you used to have the entrepreneur that builds a business over 10, 20 years. The entrepreneurs that built the businesses that we own have been in those businesses for 20 to 25 years on it, typically. But now you have a lot of entrepreneurs that build a business in 5 years, a great business in 5 years, or you still have ones that are there for 30 years. You don't have much sometimes in between. And so that's also interesting from an acquisition point of view and how you approach it, your tone, your approach. But from a trend perspective, I don't know if it really changes our approach. I don't think we overly think it. I don't know.
I think the trends are kind of noise, if I could say that, Mario. I think what hasn't changed is like a good starting point, because we look at like getting a deal done is not the finish line. That's actually the start line, right? When you get a deal closed, you've now started your journey. So pick a good start point, have conviction, passion in what you're doing, take bold moves, drive the business forward. That doesn't really change, right? With all the things that are happening outside are kind of trends. And I think that you can find opportunities in in any market. And I think we're more impressed actually that what stays the same than what changes, if that makes sense.
Yeah. And on that point, what stays the same changes because there is so much change. Sometimes being consistent and sticking to your guns and your thesis and how you approach people and build partnerships or relationships with you. Sometimes when those things are constant, it can be a strength. I think if there's one thing that surprised me is some of the investors and capital providers have grown, they've inverted, they've changed, they've come and gone, they've followed a lot of different trends. And some of those trends are good and healthy. And for good or for bad, I think we're kind of stick to our knitting and keep our nose down to the grindstone. And it's not too flashy, but it seems to work for us. So I don't know if there's like a trend in there, but I think it should give solace to anyone who feels like they do have to be like 3 or 4 things to a changing world. Whereas when you could face the world and wake up with one face and it's the same to everyone, it makes things a lot easier too, from my perspective.
I have one more question, if I could. I mean, GoodCapital has had enormous success raising funds deal by deal. Obviously, it's a lot of work. It's a heck of a lot of struggle to raise deal by deal. You have an incredible track record. Do you ever think about raising committed capital? Have you ever thought to yourself, maybe we'll one day raise a fund? Or do you like the approach that you have done very well by 4 deals with each different investors?
I don't think we would rule it out. I think it also just depends on what our investors, what's good for them. But now I've been a little bit more agnostic on it because we're not at our heart asset managers. So we don't track AUM. We only want to do these deals if they really make sense for us, if we're excited about them. And when the last deal comes that we're excited about for our careers, that will be the last deal we do, and that's fine. So that gives us a lot of flexibility, and we don't have to worry about that too much. But yes, we have many investors across all of our deals. Some of our deals, it allows them to size their investment accordingly and size up depending on the profile of the deal. So it gives our investors a lot of flexibility. But yeah, one day would having like a committed fund be better for getting multiple of invested capital through building great companies? It could. If that connection is a strong link, certainly would consider it, but it's not the only path to success in our view.
Quinten and Adrian, I want to thank you for joining us today. It's been great to learn a bit about your history, a little bit about the success of GoodCapital, and thank you for being willing to share a little bit of the secret sauce. So we appreciate that you're willing to tell us some of what's made GoodCapital such a great story in our marketplace. Thank you for joining.
Our pleasure.
Yeah, thanks, Mario. Thanks for having us.
Thank you for tuning in to Views from the Market. Stay updated with the latest episodes by subscribing wherever you find your podcasts or visiting stikeman.com/viewsfromthemarket.